Hello everyone, this is the Intrinsic Trader here, and today we're going to be looking at First Majestic Silver, ticker symbol AG, and we're going to be doing some fundamental analysis of the stock. In this presentation, we're going to go over a brief background of the company. I'm just going to talk a little bit about the mines that they have and some of the projects that they're working on. And we're also going to discuss some of the strengths and weaknesses that the company currently has and may have in the future. And towards the end, we're going to look at some of the future ideals and far sight kind of projects that they might have down the line and where they might end up being. Now, before we actually start, I want to go ahead and just make it clear I'm not a financial advisor, of course. Don't use anything I say in this presentation to make some sort of investment decision. You need to do your own research. I've done the best I can with this presentation to gather all the information and condense it, but it might not be completely accurate, so make sure you do your own research. And I also want to make it clear that I currently hold a position in First Majestic stock. So just keep all that in mind. And without further ado, let's go ahead and get started with the presentation. Alright, so we're going to start things off with the price to earnings ratio, the PE ratio. And the current PE ratio of First Majestic Silver is at 80.94 TTM. Now, that's typically higher than you want it. You usually want to have a PE ratio around 20, give or take, because that'll show that the earnings that you're making are pretty high relative to the cost you're paying. 80.94 is a little bit higher than you would want to see it. But at the same time, that's not necessarily a bad thing, depending on the context of the stock itself. For example, a high PE ratio typically means that investors are very optimistic on the future of the company. So people think that the company is going to grow and be successful. That's why they've invested and are willing to pay a higher premium on it. A good example of this is Tesla, that has a PE ratio of around 654, which is absolutely crazy, but if people have that much conviction that the stock is going to go up, then they're going to be willing to pay for it. And they could be right. Like, you need to look into the fundamentals and you need to see how all the company's working before you just look at a ratio and decide that it's good or bad. And in this presentation, I'm going to try and go over some of the different aspects of the company that may justify this price here. So let's go ahead and move on. All right, we're going to move on to a brief overview of the company itself now and some of the facilities they have. So First Majestic is a Canadian-based mining company, and they have most of their facilities located in Mexico. One of them is in the U.S., in Nevada. It was somewhat recently purchased. The company's primary target is silver, but they also mine for other resources, secondary being gold. A lot of their facilities, they are trying to amp up their gold production, but it's still primarily silver. And they have a little bit of lead and zinc and other things that they do on the side, but they're much smaller quantities. Currently, they have 4 mines that are fully functional, but there's an additional 4 mines that are undergoing preparation, such as examination and exploration, and fixing up the facilities themselves to make sure that they're able to function properly. And this is a really good thing to see too, the fact that they're expanding like this, because this tells you that in the future that they're going to be much more profitable and they're going to grow at a much faster rate. All right, let's go ahead and move on to some of the financials of the company now. The company has a convertible debt of $143.7 million. Conversely, though, they have around $201 million in cash to try and offset this. They also have a market cap of $3.6 billion with a net income of $363.9 million annually. And this is really good because this shows that they can bring in a lot of money and they have a lot of equity from the market cap, and they also have a lot of equity from the facilities that they own. So they have a very low equity to debt ratio because of this. And with the new mines that are coming out, that's just going to increase the income over time to try and further take them out of that risk factor, because that's one thing you always want to try and avoid, is having a high debt to equity ratio. So this is really good. The main form of income for First Majestic is through the sale of its metals, and that makes sense because it is a mining company. That's how they make most of their sales. And the price of the commodities directly affects the income of the company, right? So if silver goes up, then the sales of the company goes up, and they make more money, right? And that should make sense. So like, I have 2 charts here. The top one is First Majestic's stock price, and the bottom one is the price of silver. And if you notice, they both have similar peaks and valleys. I tried to line them up so that their time frame was the same, and you can see that they mimic each other to an extent here. So bottom line really is, if the price of silver goes up, then the company's returns are going to go up. But how can you confirm or guarantee that silver is going to go up? I think the future of the world is heading towards clean green energy. It might not be today, but I think it is heading in that direction. You look at all the solar panels and all the electric cars that they're trying to push, and to me, it's clear we're heading that direction. But you might be wondering, well, okay, how much of a dent is all of this stuff making on the supply of silver? And I would say pretty big. There have been a lot of shortages of silver, especially in recent, but it has been building up for some time. Delays, especially on industrialization in particular, but physical as well. So if you've looked into AMD recently, within the last several months, you know that they've had a lot of shortages of silver in their products. They've had to delay their products because they don't have the silver to make them. And if you've tried to buy physical silver from online stores or whatever, then you'll know that they've had delays on that. You might have to wait several months to get your silver because they don't have it and they're having to wait. So eventually, it might not be immediately, but eventually, this will have to drive the price up. I just don't see how the price can stay this low if we have all of these shortages. So this could be a catalyst in the future. All right, so now we're going to go ahead and talk about some potential red flags for the company I saw when I was doing my research. And one of the big things that came up to me was that all of the mines currently for the company, except for one right now, are all located in Mexico. And this is, you can see here I put, it's the all your eggs in one basket kind of mindset. You want to diversify, and if there's ever any kind of political nonsense that goes on with Mexico, then they're going to come under some heat, and if they have all of their companies there, that could be an issue. Just for example, there was a lawsuit that recently came up in Mexico over some payment issues, and they're trying to get that sorted out right now, and it's looking like it's going to take some time. So that is one thing that I'm keeping on my mind right now. And the other thing is the lack of results from the exploration projects. Now, it sounds like they're pretty optimistic about it right now, but you never know. I mean, there could come an instance where they think that they're going to find a lot of resources to mine from these new places that they've purchased, but maybe it turns out that they just don't find that much, and that could have bad implications on the stock price. It could drop because of that. But that's just another potential thing you should keep in the back of your head while moving forward. All right, that basically wraps up the presentation. I want to give a few quick final notes before I give my conclusion. Let's go ahead and get into it. There are some aspects I thought were really good about the company. It has strong growth opportunity, and this mostly arises from the low debt to equity ratio that they have. Something I'm always looking for in a company, especially if it's a little bit smaller, is how much debt do they have, because I never really want to have that worry in the back of my head that they might have financial issues and they might have bankruptcy on the table. So not having that really gives me a sigh of relief. And it's very clear, too, that they've been trying to expand. Like, they've been buying a bunch of different mines. They've been trying to work with them to make them more suitable for mining. And I think that that's a really good sign of growth to come in the future. And also, they have a very good standing with the locations that they're currently at. Yes, they have that one lawsuit they're dealing with, but it seems like as a whole with Mexico, the U.S., and Canada, that they're kind of working with all of those different states pretty well. As far as the PE ratio goes, the company is, I think, moderately overvalued. Now, this is relative, though, because it kind of depends on your stance. Specifically with silver, I think there's an argument to be made that this price is fair, because I think, and I think a lot of you watching will agree, that silver is more likely than not going to go up in the future. You got to remember the future of silver here. With all of this electric and green energy that we're having, I think that this will drive the price of silver up, which could increase earnings and justify the PE ratio that we currently have. I think the lack of diversity is a bit of a questionable move. I would really like to see them try and diversify out, maybe put more mines in the US, put more mines in Australia. They were talking about those two places. But I'm just worried that if you have all of your eggs in one basket in Mexico here, that could become an issue if there's ever a bad standing between the company and Mexico, because then they might try and restrict operations, and that could be a big danger for the company if that would ever happen. In conclusion, I liked a lot of the things I saw with this company, so much so that, combined with the technical analysis that I did, I decided that I would double down on my position. So today, there was a slight pullback, and I went ahead and bought another 1,000 shares to bring me up to 2,000. And I'm probably going to hold it until we see some sort of bounce coming up. On a last note, if you enjoyed what you saw here, I would really appreciate it if you left a like. I'm trying to grow this channel, so any like I get will help push this video out to other people. and if you want to see more content like this, I would really appreciate it if you subscribe. With all that, I hope you have a great day and take care.